Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Alonso Muñoz, CIO at Hamilton Capital Partners. Where are you seeing some animal spirits?
So there's a lot to unpack. I mean, in the next 30 days, we're going to get some labor market data. We're going to get the election. We're going to get a Fed meeting. So we're still optimistic that the U.S. markets can perform. Obviously, we're at the beginning of earnings season. We've seen some of the banks with some blockbuster numbers. And so for us, really leaning to this equity bull market. This year alone, the S&P has had 46 notches on record highs. And so we think this can continue on the back of easing monetary policy, fiscal stimulus, and potentially some tailwinds from these earnings.
So I want you to comment on one of the headlines today, the pullback that we saw in a big way in shares of ASML. Big miss on bookings, half of what the street was looking for here. Obviously, this is the high-end manufacturer of the chip-making equipment that a company like TSMC would purchase. I think one of these units sells for about $150 million. What do you make of this? Is it an indication of broader weakness in the economy, or is it something that is so industry specific we shouldn't get too upset about it?
Well, I think it could be. I mean, for ASML specifically, some of their biggest customers are Intel and Samsung. And we know Intel's had some troubles over the last couple of quarters. When you look at the broader industry specifically, you look at AMD and NVIDIA, some of the feedback from the analyst community and the CEOs themselves has been very positive as they look forward to sales, data revenue, and some of the new upcoming chips that they're designing.
Yeah, so it's a little bit of an interesting time because, we had the Bank of America investor survey, and they kind of felt like too many people on one side of the boat. Then you had Goldman Sachs saying, we're going to power through right into the end of the year. And actually, if you look at the strategists and their estimates, they're below where it looks like the market is heading. So, are we climbing a wall of worry here, and do we have room to run? Or, has everybody who wants to buy already bought?
I think there could be a lot of the worry in 2022 was that rates were restrictive and monetary policy was, really putting a damper on the equity party. But as we look forward the next 12 months, it's likely that the Fed now pivots and starts to lower rates, and that should be supportive for equity markets. I think some of the conversations that you're pointing out and that we're having across with our clients are valuations, and where valuations are today, specifically in some of these names that have run up significantly like NVIDIA. However, at the end of the day, when we look at these companies, the bars sit really, really high, and they're still continuing to perform. They've got a lot of cash on hand, and we think that, less restrictive monetary policy should be supportive over the next couple of quarters.
So you don't seem to believe that the Fed becoming a little bit more easy in terms of policy, a few more rate cuts here is going to come out of concern of much greater economic weakness? Or you think really, hey, they're going to be successful in getting us this soft landing?
Well, that's a good comment, and that's a good question. I think if you look at the data, it's sort of been conflicting in some ways. The jobs data is okay. CPI and PPI came in a little bit hotter than expected. But then we look at, the equity markets, and we've had, pretty significant rally coming up, over the last couple of months going into the election and into the fourth quarter. So we think that there's some, seasonal factors that are supportive of the equity market continuing to run higher. And as always, the stock market's going to climb a wall of worry.
Well, it seems like a time that is really good for stock pickers. I guess you can buy the index too. I mean, it's at record highs. So when you see a company like J.B. Hunt, its shares bounced 7% in late trading. Adidas raising its annual profit target. But then you have other companies like Walgreens, Boots Alliance struggling, and others that we report on every day. Look at ASML. So are you relishing this time for being able to pick stocks?
Yeah, I think certainly that's a good point too. And one thing that we're really looking out for in some of these earnings releases is forward guidance. We're seeing a little bit of weakness in the consumer. It's very clear from some of the retail earnings that have come out, or at least that we've seen, that the consumer is pulling back, and there's some nervousness about not only the economy. We found it interesting that the consumer sentiment report was so poor, but then you get strong economic data, lower unemployment rate, lower jobless claims. So it's a really interesting environment, and it feeds into that stock pickers market where you can be very selective. Obviously, the financials have done really nicely over the last couple of days, and we're going to see how that develops. I think specifically we're looking out for some of the mega cap, large cap tech companies and seeing how they do in this environment, given the fact that, as you said, the bar is set really high.
What are you seeing right now in the fixed income space that seems attractive here? I mean, if you're right and we get many more rate cuts, is the bond market not a buy right now?
That's an interesting point. So yields obviously have moved a little bit higher. Some of that aggressive Fed cutting has been priced out of the market. And one of the things that we're looking out for is potentially extending some duration and locking in some of those yields, higher yields, before we maybe get into a lower rate environment in the first or second quarter of next year, or in credit across the different durations as well. We find interesting.
Okay, just a really quick question. China? Question mark?
Yeah, very confusing. I mean, we saw some data yesterday that was kind of interesting in terms of stimulus at the federal level. It turns out, it's going to come in the form of maybe local refinancings, $850 billion worth. So it's interesting. I think it's a tough decisions for investors looking at China, and making the plunge. When if you look back over the last couple of years, it's been really, really tough time to be a China investor.
Yeah. All right, Alonso. Great stuff. Thank you for joining us. Alonso Muñoz, CIO at Hamilton Capital Partners. It's time to check in with Bloomberg Opinion. We are joined by Bloomberg News Editor-in-Chief Emeritus, Matthew Winkler, who has been writing about Taiwan and has a piece on the terminal that is subtitled, Taiwan Beats the World with Tech-Driven Market Halo. Matt, thanks very much for joining us. I remember, in the days past when I lived in Taiwan, I'd go home and I'd tell people I was living in Taiwan and they'd say, oh, do you speak Japanese? Taiwan wasn't on the map then, but it is now. Why?
It's a superlative. Taiwan is one of the bastions of prosperity in the world right now. And that's because it leads the world with the best performing stock market. It's got record exports. It's got a booming real estate market. Its cost of living has been one of the best and most stable since 2008. It's got the most stable and least volatile currency after the Singapore dollar. Everybody's heard of semiconductors. That's the place, Taiwan, where semiconductors of the most advanced type come from. And these are the brains of smart phones, everything that you do with electric vehicles, cloud computing, transition, and so forth. And you would never know how well Taiwan is doing because the prevailing narrative, as you just said, is invariably about some man-made disaster or a natural disaster like the recent typhoon. But the reality is, typhoon or not, Taiwan has gone from strength to strength.
I'm often struck by how people living in Taiwan don't seem as concerned about the geopolitical rivalry, obviously, with China. And perhaps that's cultural because we're all Chinese. That's the sort of thinking. But when you talk to people there, do you sense that people are not so nervous about some impending battle with China?
No, I think that's quite right. I think, as you just said, if you walk anywhere in Taipei, you get a sense that this is a city that is just getting, as I said, more prosperous. And the last thing people are thinking about is what people outside of China talk about, which is this geopolitical fog that envelops any discussion of Taiwan. The reality is, though, that the world, especially the number one economy, which is the U.S., is tethered to Taiwan in a way that is exceptional and not likely to change. And that has everything to do with, I said, is what we call chips, semiconductors. And this is the place where every major company that does everything between your ears gets their chips. And so Taiwan is inextricably linked to the prosperity of the United States. And that isn't going to change. And that's a very important characteristic. And if anything, it's only become more apparent in the past 10 years, not less apparent.
Absolutely. I'm sure Morris Chang is so proud of what TSMC has built. It's really helped put Taiwan on the map. I'm sure you've been given some access, and from your research, you can perhaps answer this question. But what is it that has led to TSMC's success?
Well, this is a company that I guess you could say is a bit like what Andy Grove created. You know, Andy Grove is one of the founders of Intel, and he used to say only the paranoid survive. And this company, Taiwan Semiconductor, is constantly thinking about what is the next new thing, and that is what makes it so innovative.
Matt, thank you so much for joining us here live on the program. Bloomberg News Editor-in-Chief Emeritus Matt Winkler. You can read more on this and other stories from Bloomberg Opinion at Bloomberg.com/opinion and on the terminal by typing OPIN. Go. Olivier Dacier joins us, Head of Investment Decision Research for the Asia Pacific at SimCorp. Olivia, I think ASML is the 800-pound gorilla in the room. So let's talk a little bit about the impact on the broader economy, because that's quite relevant for everybody out here. If you look at AI accelerators, the demand is massive. Companies like NVIDIA can't even keep up. But then if you look at areas like automotive and industrial, customers have been cutting back, and they may have quite large inventory. So there's a little bifurcation there. So I want to ask you, how big is the tell from ASML about the global economy?
I think it's, mostly a wake-up call to reality, right? We've been saying AI could do all these things, but it actually can't. So it can't drive a car by itself yet. It's still got a long way to learn before it can be applied to other things than just chatbots and purely technology or internet kind of industries. And I think that's where a lot of that is coming now. And people have rushed to buy these chips because they were afraid of shortage. And not really having tested the applications yet or anything yet. And now they're discovering that, okay, it's going to take us a little bit longer, a little bit more testing, a little bit more engineering to figure out how to really use this in the manufacturing of a car or manufacturing of a toaster or anything like that. So I think that's what we're seeing. But and at the same time, analysts or investors had really outsized expectations for that sector, for earnings, for sales and everything, like just thinking it would go on like that forever. So I think it's a little bit of a reality check, but not any kind of red flags yet for global economy or global tech sector.
The other part of the story here is the fact that a lot of the equipment manufactured by ASML to actually produce semiconductors in cases of more advanced chips, I mean, this equipment is restricted. Let's not forget that, right? So, I mean, if you're the company, might we not hear in the days ahead, hey, if you loosen some of the restrictions, maybe our performance would be better?
It could, but I think that's an excuse that no one would really use. Restrictions have been in place for a long time, but there are so many loopholes around these things that everybody who needs one can get one. So they don't really work in terms of sanctions.
And another mitigating factor in this might be that a company like TSMC, which is ever important on the global stage, is getting so good in its efficiency, improving its EUV efficiency, that it kind of reduces the need for these specialty machines that ASML is making. So I guess like what you're saying is it's a little too early to say that this is a big read here on the global economy, but something worth watching, right?
Yes, that's right. And it's worth watching because it's such a big part of investors' portfolios nowadays, right? So they obviously will have taken a hit from that and will be investing, be upset. But the performance year to date is so good already that it's just really a chip in the armor.
We were talking yesterday on the program about new ideas that the Biden administration has to further restrict semiconductors. I mean, something away from China, maybe countries in the Mideast that are subject to certain export controls. I mean, is this going to have a boomerang effect? Maybe we see certain countries begin to establish blocks independent of, let's say, companies in Europe and the United States?
We may see that. I mean, obviously, we're moving now to a world where there's more adversarial kinds of relationships than friendly or cooperative kinds of relationships. But as we've seen from what's happened with Russia and Ukraine and Huawei and all that, these kinds of sanctions don't work. There's just too many loopholes, and people can get through them. So I think there's going to be a rethink of how do we sanction regimes or companies or technologies. There's got to be a better way than what we have right now.
Another big topic of interest, another sort of 800-pound gorilla in the room, is the Chinese economy and efforts by policymakers to stimulate there. We've seen a lot of different areas here that they're working on, both from lowering interest rates and providing money to the banks and trying to stimulate the property sector. And we've got a briefing scheduled for tomorrow on housing. Do you think that this is something that has teeth and will work, or do you think it will fall short?
I think we've seen a number of announcements from China, and from the outset, we thought, okay, this is good news. They're realizing they have a problem, and that's usually the first step in solving it. They've announced several rescue missions now for the real estate market and the debt problem that they have, which is massive. But what we haven't yet heard is an admission that the economic model that they've been following for the last 10 or 20 years is the cause of these problems and needs to be changed. And they need to turn around their economic model. They need to change their taxing model, their fiscal policy, and they need to rescue the banks. And until we see those three things, we're unlikely to believe that this will work. This is just a rescue mission, and it might be a floor for a while, which is a good thing, but we'll go through the floor next year.
Well, what you're suggesting seems to be pretty radical. What's the probability of that type of drastic change occurring, do you think?
That's a really big question.
There you go.
Very, very slow, yes. That's the problem, isn't it?
Well, I think you have really hit at the heart of the problem, though. I think investors in particular would like to see Xi Jinping perhaps show some humility and say that patience is needed for some of these lofty goals that he has. They're worthy goals, but they take time, and you have a model in the economy that has to be adjusted. Can't happen overnight. In the meantime, let's do this. Let's get the animal spirits going again. But it's just not very likely.
Yes, agreed.
What about Japan? Okay. I want to ask you very quickly before we let you go. 30 seconds. Do you remain positive on your outlook for Japan?
I think Japan's probably peaked right now. It's had this big run for tech and for this supply chain realignment away from China. The yen is now stabilizing and maybe strengthening further. So I think probably Japan has peaked this year and will start to slow down next year.
All right, Olivier, thanks very much for joining us. Olivier Dacier, Head of Investment Decision Research for the Asia Pacific at SimCorp. David Finnerty, Bloomberg FX and Rates Strategist. So I'm wondering whether we might be three strikes you're out here in China. We had the policy, the Economic Policy Center coming out with what was a disappointing briefing, and then the Finance Ministry last weekend, and now we have the Housing Minister tomorrow. Perhaps that's a cynical look, David, but what are you expecting to hear from the Housing Minister, and are investors kind of losing interest in China at the moment?
I think it's obviously you'd have to assume that any measures he announces will be to prop up the property market. Again, whether that's enough, I mean, given what's already been elaborated and divulged, you'd have to think it may not be enough at the moment. The market's certainly turned a bit sceptical. But then again, I think it depends on what perspective. If you're doing it from the yuan's perspective, then a lot of that is some disappointment, but it's also a dollar. Suddenly the market's come very bullish on the dollar because obviously they dial back interest rate expectations. But certainly at the moment, I think the market, to be fair to say, has been a bit disappointed overall with what has been announced. But that's been a regular story that's been going on literally for the last couple of years.
So given the stimulus measures that we've seen from Beijing, I think the offshore currency was able to break above the 50-day moving average. I mean, if you look at it on a technical basis, how does the Chinese currency appear right now?
Yeah, well, certainly it's one of the favourite currencies. I was just talking to some of my trader contacts, and for hedge funds, it's definitely one that going into election. It's one of the currencies to bet against that it will weaken. And what's been interesting is a lot of the trades that have been put on, certainly in the option market, what's called vanilla call, or it's from, if you're doing dollar yuan, it'd be dollar yuan vanilla calls, which basically those are outright calls. And what that means is there's unlimited profit. So normally you put on something like a call spread or a digi, something like that, which is a bit cheaper to put on, maybe a bit more limited gains. But in the head of that, if you're doing an outright call, it depends what strike you're doing it at. But basically that's more expensive. But obviously you're putting that on, you think, well, it may be more expensive, but I think my gains will warrant it. So I think from the investor viewpoint, you're certainly getting the idea that the dollar yuan has room to grow and quite decent amount in the near term based off disappointment over the economy and obviously the idea that Donald Trump may become president next month.
When you talk to investors, David, what do you hear them saying about the key to rebuilding confidence of the consumer in China?
I think the property certainly is one thing. I think in any market, if the property's way down, I mean, that's where a lot of people hold the biggest asset. So obviously if that's declining, then that's not a positive for just mentality. So I think the property market's certainly the key thing I'd focus on. I mean, obviously the stock market is a near term, you can get a near term high of that and that can help pick up the confidence. But I think overall, property market, that's literally where most people have the money stored, or they have the biggest debt, and hence weighs on psychology the most.
Does it come as a surprise to you that with all the uncertainty around China, that the Japanese yen hasn't been a beneficiary of this uncertainty?
Not so much, really. I think there is some, if it hasn't been really mild risk off, and very mild at the end of the day, if any, you could say. So you need a heavier risk off the yen to benefit. And you have to remember, again, with interest rate differentials sort of favouring dollar, it's the dollar against everything at the moment. And you've seen it strengthen, obviously, since the US payroll data came out. So, and the same thing, logic certainly applies to the yen, because, the BOJ, they keep saying that if they meet our outlook reports, if the economic data does, then we will hike. But the market's not really, at the moment, not looking for pricing in a rate hike until mid next year. So unless that changes dramatically, interest rate differentials continue to favour dollar yen slightly to the upside.
And as you said, after we got the labor data and also the slightly hotter than expected CPI report, you've seen the dollar gain. Over the past month, it's up about 2% or so. Is this something that continues, or is there some sort of a ceiling in here somewhere for the Bloomberg Dollar Spot Index?
I think in the near term there is some sort of ceiling. The logic being that market pricing has now gone basically just under 2 quarter-point cuts this year. I mean, really, for the dollar to pick up more, you'd really need a bit heavy risk off, which we don't see at the moment. Could obviously happen, or you'd obviously need that tightening to get even tighter. You could go theoretically to 1 quarter-point cut this year, but the market's always biased towards more rate cuts. So unless something like retail sales comes out exceptionally strong, US retail sales that is, then I think the market's going to hover around that 2 cuts this year, which will limit dollar upside. Now I think it's dialed back enough where it's back more in line with expectations of what the Fed is saying, and what the data is sort of saying as well.
Do you believe that the U.S. presidential election 3 weeks from tonight is going to be a market moving event?
Obviously, I do. I think if a gentleman wins it, Donald Trump wins it, I think it will, purely because of what he's posturing with the tariffs and stuff. So currencies will certainly move on that. And, I think equities will react as well. So I think there'll be a bigger reaction to him. Now, having said that, what's interesting about Donald Trump is, the dollar, we take the dollar as an example, when he won in 2016, if you look at the Bloomberg Dollar Index or the Dollar Index, it rallied going into his actual presidential inauguration. And then actually it weakened. And then it was flip-flopped all over the place, but most of the time it was actually weaker. And what I'm trying to say from that is, it's sort of buy the rumor, sell the fact at the moment is, they're going to buy, if Donald Trump wins, it's buy the dollar, blah, blah, blah. And then the reality is when he gets into become president, it's what does he actually do? And of course, at the end of the day, how is the US economy fare? What is interest rates? What does the Fed do? So that will be the bigger picture. But in the near term, will dominate the dollar theme.
So we've got gold and the VIX at kind of higher levels, yet we've got equities at highs. What gives?
That's a good question, that one. The moment, I don't know. I think gold stays elevated. I think, it really depends on interest rates. I think at the moment, I don't see him going high. I think the VIX gives, if I have to give anything, I think volatility there will calm down. That's what I would say would give.
Many thanks to David Finnerty, Bloomberg FX and Rates Strategist.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.